Welcome to Yellow Tunnel. My name is Laura Karpel. I'm CEO and founder of Yellow Tunnel, and today I'd like to go over current market condition, go over a weekly strategy roundtable where we talk about NVDA, Microsoft, Magnificent Seven stocks. We're going to talk about consumer staples, utilities, different sector, revisit macroeconomic headwinds, right? Soft landing versus hard landing, interest rates, and what to expect in the market, short-term, long-term, and go over the Yellow Tunnel tools and what are the opportunities in the market, especially when the market is volatile. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to say hi to all the new subscribers. The difference between Yellow Tunnel and maybe some of the other services out there is that we do two things, and I think we do it well. One is technology. So my background is technology. I have a master's degree in computer science. I was a CTO of several publicly traded companies that went public. I was one of the first employees. So I was able to assemble a team of financial engineers that have background in mathematics, physics, stock market, and they developed for the past 20 years, been developing models to help me find opportunities in the market. Short-term, long-term, and medium. So they provide signals, and we constantly optimize these models based on the latest advances in artificial intelligence. There's a lot of new models, a lot of new way to do the clustering analysis. So that's one thing. And the other thing, we actually trade. I actually trade them in live trading room. We have Keith, another professional trader, ex-market maker, also have master's degree in mathematics. So, and we trade these signals in the live trading room. So that's I think that's the difference, unique difference between our services and maybe some of the other services. I'm going to go through disclosures. I'm going to go to specific trade ideas. So it's very important to look at the disclosures, right? Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor CC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. All right, before we jump into trading psychology, let's talk about current market pullback. So let's look at stock forecast toolbox. So aggressive power trader, this is one of our main model that shows you short-term predictions and long-term predictions, right? So for Spider basically says that we're still trading in the uptrend, right? The uptrend, it has not been broken. And support is 534 for tomorrow by 548. So I agree with the model. I think we're still trading in the uptrend long term, 2-3 months going into the end of the year. We're still trading in long-term uptrend, but short-term, obviously, there is a pullback. And if you look at the macroeconomic conditions, what to expect next is we have CPI data, right? So on one hand, we have fear of hard landing or recession. You do have manufacturing data was very weak this week. Unemployment, right? They revised some of the numbers down in terms of creation of new jobs. So that was sparked volatility in the market. And you can see there are other signs in terms of auto sales, home construction. You can see that the economy is cooling off. So, but the question is it just cooling off or is it heading into a recession? Is the Fed gonna lower interest rate by 25 basis points, or will it cut by 50 basis points? 25 basis points could be not enough, right? And then market can sell off. 50 basis points could be a sign that Fed sees some issues in the current economy and they're being too aggressive, right? So Fed is stuck between a rock and a hard place, right, in terms of making a decision. And you can see based on seasonality, usually if you look at the seasonality, you do have September and October are one of the weakest months. And we have very similar price action that we had in July, right? Market pulled back to 50-day moving average, bounced back, and then another drop down, recovered, V-shaped recovery, which, I was actually very surprised that we were able to get to the V-shaped recovery. Now we're pulling back again, similar price pattern. 540 is well supported, right? If you were in my live trading room, you've seen that I called the 540 based on the bar chart tools, right? We've seen gamma. It was a very large gamma when we were at 550, 560. Largest gamma positioning was 540. Why is the gamma important? This shows you dealer exposure, right? This is a dealer exposure, how much, how many puts the people were buying at the 540, and that was the main support level. And this is probably why not by accident we touched right, we actually closed right at 540. And I said, if the 550 level doesn't hold, then the next level is 540. If you look at the gamma exposure, I prepared this, bar chart, spiders, gamma levels, gamma exposure. You can see what that means. Probably should make it a little bit bigger. But you can see that the next level after 540, which is well positioned, is 530. 530, 520, there's not a lot of positioning outside the 530 and 520 levels. So it's very important for the bulls to hold on to the 540 level. If they're unable to hold on to the 540 level, then market could quickly drop to either 2 standard deviation, right? This was April highs, 2 standard deviation about 525, or revisiting the lows, 510. So all these levels are still on the table, right? In the live trading room, I always say, don't try to call the bottom, look for the signs of the bottoming process. And the bottoming process hasn't started yet, right? We haven't seen kind of, at least for a few days, where the market is not dropping. And so far, the action been when we have good news, right? Last week, we had good news in terms of initial claims. They were stable, and services data was better than expected. And the bulls were not able to stage rebound, right? Not Wednesday, not Thursday. And any negative news, where in unemployment data, you could interpret it in positive or negative, right? Because the wages did go up, a number of hours people are working still going up, and there's still one-to-one. Even Joel's numbers showing you the lowest level since pre-pandemic level. You still, for every person who looks for a job, there's 1 job opening, actually 1.1 job openings. So it wasn't horrible, it wasn't bad, but right now people are concentrating on negative news. So on positive news, you have a short rebound. On the negative news, you have a pretty sharp pullback. So 540 is a very important line in the sand, and still most macroeconomic, if you have a top to bottom approach, are looking at 2 data points. One is the Nikkei, right? You have a Nikkei that sparked the first wave of the sell-off, right? We had worse than expected unemployment data back in August, and right after that we had carry trade, where Nikkei dropped, biggest drop since Black Friday of 1987. You had a very sharp rebound above 200, above 50-day moving average. Everybody kind of felt good, right, that we're able to recover. And now you have a second wave, right? So you have this wave A, kind of classical wave A, wave B, and now wave C is coming, right? The wave C starts. And you don't know where it ends, right? It could end here or it could end here, right? Usually it could be a same kind of magnitude, which would imply roughly, maybe 29,000 level on Nikkei. So that is something that I think people are concerned over the weekend, and it will be interesting to see if there's any news over the weekend that would push the market down. Usually I look at Bitcoin, right? You can look at the Bitcoin Friday. Let's see, Bitcoin, there's got to be data now. Bitcoin, why is it not trading? Bitcoin futures September. I think it should be Bitcoin level. Today. Let's see Bitcoin today. September 7th. September 8th. Okay, so Friday was September 6th. September 6th. From 57,000 to 53,000. 53,000 Bitcoin, 53,000. So, okay. So Bitcoin also dropped and looks like it's retesting the lows. So you can look at the Bitcoin as a proxy for risk taking, right? It's trading right at the August lows. You can look at Japanese yen, right? It trades exactly at the Monday lows, right? And Nikkei is approaching Monday's low, right? And NVDA is approaching beginning of August, the carry trade. So I think Japanese yen sitting at the key level, right? Bitcoin sitting at the key level, and I think that's the most important levels, right? And you look at the 10-year yield, it also sitting at the August 5th low. So this is a very important level. If interest rate continue to drop, anything below 3.80 basically implies that people are, market participants are concerned with hard landing, right? And if 10-year yield or 2-year yield continues to make new lows, right, and breaks through the 2023, 2024 lows, on 2-year yield, you don't really have anything until 3%. So that implies that the Fed is going to cut a lot more aggressively, maybe 50 basis points at a time instead of 25, because right now the Fed rate is 5.25, 5.5, right? If they do the 25 basis increment, why is two-year yield is at 3.65, where 1 month's yield is at 5.06, right? So that is a very important support level. I would look at the macroeconomic conditions and not on NVDA earnings or individual earnings, because that's, I think, what can carry market lower, right? And prone market for being lower. So spiders is sitting at the important level, Nikkei sitting at the important level, US dollar, Japanese yen, very important level. And I would, next week, market is oversold and potentially should bounce back to 550, try to reclaim the 50-day moving average, kind of like here, right? In July, drop, reclaim, and then another big drop. So market is oversold, and I think, the patterns are probably something like this: A, B, C. It could be D, right? It could be D and then E, right? Kind of final capitulation, or multiple of these, ABC patterns. So that's the question, right? So on one hand, we could, we did this webinar last week, and there are a lot of people put down that we can still have one, right? So we go through this positive and negative scenarios. On one hand, this could be a short-term pullback. People are concerned about the inflation. They're concerned about recession. And if inflation ticks down and Powell basically says there is no signs of economic distress, right? The Fed decision, not next week, but the following week, market could go higher, right? Could continue going higher going into elections, right? That's scenario number one. Scenario number two, right? Scenario number two is that, there are definitely signs of economy decelerating, even though GDP is still, above zero, right? 2%. I think for the third quarter projection is, I think, 2 to 2.5%. So GDP is still positive. People are still employed. Companies are still making money, right? But the soft landing and hard landing kind of go hand in hand, and you have scenario number two. We're trading in a range, right? Maybe we do 2 standard deviation move, and this level actually holds, right? April lows holds about 525, 520 level, maybe 510. Maybe we revisit the lows, but the August or April lows will hold, right? This level will hold, because this is a big level of support, and still implies that we are trading in long-term bullish trend. Scenario number three, we break through the April lows, we break through August lows, and there are more signs of recession. Maybe Fed cuts by 50 basis, cut by 50 basis points on September, and people just feel it, that this is a sign of recession, or there's some dislocation, liquidity issues, right? Because of the carry trade, Japanese carry trade. People, a lot of banks were exposed to not only commercial real estate that's continues to default in very large numbers, but also exposed to the carry trade, right? They were borrowing money in Japan and buying assets outside of Japan in large quantity. Now this trade has to be kind of unwound. So those are the three scenarios, and it's important for the traders to kind of make a decision, right? As you approach elections in November, as you approach the next earnings season, right? October, November elections, and then to the end of the year, right? Do you want to have most of your position bullish? Do you want to have most of your positions bearish? Or do you want to be market neutral? So how many of you say one? This is just a little road bump, right? And 5–10%, corrections are healthy, right? We had 10% correction here, but we're still going to have V-shaped recovery and heading higher going into elections, right? September, October. How many of you say two? There are already signs that the economy is decelerating. We're probably going to trade sideways going into elections and maybe even after. And the third scenario, we're in recession or more signs of recession. We're going to break through these, the bull trend is going to be broken. Right. Richard, 2 and 3, Lalit, 2. Anup, Arcana, George, Lalit, Lorna, Michael, Richard, Vito, William, Bill, Michael, Steve, Fred, Bob. What do you guys think? 1, 2, and 3. Okay. So most of you said 2. Most of you said 2. I do agree that I think probably 2 is the scenario. So I'm also trading based on scenario number 2. Short term, I think there's more pressure to the downside. I don't think the sell-off is the end of it, but I do think if the 540, right now I'm watching 540. As soon as 540 level doesn't hold, like the 550, right? In one day we broke to the 550. If the 540 level doesn't hold, there's really no support in these levels. And more concerning is that in terms of positioning, most of the gamma is concentrated in September expiration. As of right now, there's very few people hedged beyond the September 20th, right, which is in 2 weeks. So options expiration could if there's any negative news during the options expiration and all of that gamma disappears, then that would be an invitation to market pull back to, potentially to the April lows rather quickly. But until for the next 2 weeks, I think we still have a pretty good position at 540 level, and I think we could, probably in the next 2 weeks trade sideways, but gravitate toward 540 level. How do we help on yellow tunnel? Some of the services, aggressive power trader every day. We try to find stocks that are able to, withstand the gravitational pull of the market. This Friday was NASDAQ, right? NASDAQ still in a strong uptrend, right? Despite all the pullbacks. So NASDAQ is in strong uptrend after the earnings. We've seen some stocks like Walmart, Costco trading in a strong uptrend. So consumer staples, Philip Morris, Coke, utility, right? XLU is still in a strong uptrend. REITs like VNO is still in strong uptrend. So people are gravitating toward low beta, defensive, right? Defensive versus cyclicals. People are selling, Googles of the world, right? The Googles of the world are getting destroyed, right? We haven't seen Google pull back. So the pretty sharp pullback in Google. Google is kind of trading in bear market. So the Googles, the Amazons of the world, people are selling off, but they are hiding in the in defensive consumer staples, right? So low beta versus high beta, definitely low beta defensives are outpacing the cyclicals, and even JP Morgan, that should benefit from the yield curve normalization, did pull back sharply on Friday and sitting at the 50-day moving average. So these are aggressive power trader will give you some of the signals, right? Utilities, Nasdaq, that can give market can outperform the market. We have weekly power trader, longer term signals, right? You hold the position. Aggressive power trader meant to be short term, few days, weekly, few weeks. In dynamic power trader, you can actually see all of my positions and all of my trades. So I have small caps hedge, right? I have hedge in IWM. I do have hedge in SH, kind of market neutral portfolio. I am long JP Morgan. I am long Apple and Costco. So you have different orders and different positions that you can see and enter a phone, right? You can enter your phone. There's a history of these signals and live trading room recordings and AI analysis, right? You can analyze any stock, type in Microsoft and see short-term and long-term trends. Any questions on weekly power trader? Earnings power trader is also usually why do professional traders like when the uncertainty rises and VIX rises? Because you can structure your trades like this week. Broadcom, I did earnings, I did HPE, Zscaler, and they were, I think all three were profitable. And these are all basically low probability trades, but high risk return on capital, right? Like Broadcom. Same thing, I would look at the gamma levels, right? I would look at the gamma levels and I bought 130, 135, 140 put, right? With the idea that Broadcom after the earnings will gravitate to this high open interest, between 140 and 135. And even though Broadcom doesn't move 10% every earnings, it did move within the estimated move analysis, right? On bar chart, you can see these, let's look at the Broadcom. Expected move chart. So you could see that the expectation was that it's going to move by 10%, right? Going into the event. Here you can actually see different possibilities by different expiration, right? This is expected move by a certain date, right? 9/13, 9/20. Into the event, it was 10% expected move for the Broadcom, and there was high positioning, right? If you look at AVGO, you could see that the highest position was at 135 and 140 level. 135 and 140 level is where biggest exposure was. So I was able to put on the trade for the puts for 23 cents debit. I also sold a put spread to finance this debit. Sold the out of the money call spread. But this is where you buying the stock for 23. You are participating. You participating in trade for 23 cents. You can close it for $1, right? And same thing you can do whether it's I did the same thing with HPE. I did the same thing with Zscaler. Zscaler was also a successful trade. So and you can do it with spiders, right? You can basically say that I don't want to risk a lot, but I can put a butterfly because I think market is not going to drop below 510 or 500, right? So you can do these butterflies, 530, 500, 470 butterflies, if you think market is going to continue gravitating towards certain strike prices, right? And the earnings is a perfect example, right? Earnings happen all the time, basically. But you see this expansion of volatility, and you can take advantage of that, right? So if you think VIX is not down, right? If the VIX is above 20, and it's done, and it could reach 28 or 32 level or 40 level, right, like we did in the beginning of August, then you can structure your trades like butterfly or condors, where you risk little, right? You risk little, but you could have these outsized moves, right? And you can always go to bar chart and set up some of these butterflies, and it will tell you what is the probability of the trade reaching certain level, right? Gives you probability of stock reaching a certain level for the long butterflies. Any questions on the earnings power trader probability of success versus return on capital, right? Every time you structure a trade, you do want to look at the probability, right? You can do vertical spreads, bearish call spread, let's say, on Broadcom, for the next expiration, and just see whether what is the probability of strategy breaking even, right? So you can look at the Broadcom. Let's say you want to sell 150 because you don't think it's going to close the gap, right? 150, 160. So you can go in a Broadcom bearish call spread and find 150 level. You have to go to the main site. Vertical spread. See Broadcom. And then let's say 150. Right, so 150, 160 call spread, 91% probability. Well, this is September 13. You're probably not going to get, but let's say October. Let's go to October. 150, 160, where's 150, 160, 150, 160 spread, right? 75% of the time, right? 75% of the time, Broadcom will not reach 150 level, right? So you can collect $1.85, right? You can collect 20% of the width of the strikes. I mean, maximum risk is $8, but if you don't think by October Broadcom will recover, that's the trade you can make, right? You can always look at the probability of success and distribution of different outcomes. Any questions? Richard Costco, interesting piece. Well, we'll see how that Costco will react. So far, Costco, I do have a long position in Costco. It's about 50-day moving average. It's holding on to this support level, kind of trading in the box. Definitely outperforming the market, and earnings is Costco earnings end of September. All right, any other questions? Anup, Arcana, Lalit, Lorna, Michael, Richard, Vaida, William. If you only trade in stocks, we do have Profit Accelerator. Profit Accelerator, same thing. You have I have long position, but we also have short position, right? Like SH, right? SH silver, where I'm continue to hedge using SH or silver. Any other questions? All right, guys, you've been awesome. Thank you very much, and have a great weekend. And I hope to see you in the live trading room. Thanks a lot. Anup, Arcana, Lalit, Lorna, Michael, Richard, Vaida, thank you.